Hey guys, this is Wooly from Panda.com. So today I have another video idea from First Last. First Last, thank you for your suggestion. So today we're going to talk about Dividend Aristocrats and how I go about trading and investing in these type of companies on the Tastyworks platform, and how you could possibly enhance your returns by using some of the portfolio margin feature that is available for select Tastywork clients. So I want to go over three different methods. One, you could do it by amount of, like, the kind of like a dollar drop based on the stock price. So if there's like some bad news or like weak earnings or whatever, you could probably rank the stock price itself and see which ones have dropped the most and start like fishing from there. The second thing to go about trading or investing in Dividend Aristocrats is somewhat related. You could go by their implied volatility rank. Usually, if a stock tanks, usually the implied volatility will go up, and you could potentially see some juicy put premiums. And then another method is you could sort by maybe like the dividend yield and see which ones have a good dividend yield, but don't just blindly buy a high dividend yielding stock. Start with like maybe the Dividend Aristocrat list, or you can go to dripinvesting.org and download like the latest month's like their list of dividend champions or aristocrats, or it's like in the same idea range kind of stocks. So let's jump over to the Tastyworks platform, and then maybe I'll show you like the some of the ways that I use like the dripinvesting.org, that big spreadsheet. So let's go in. Hey guys, so first I want to show you the spreadsheet from dripinvesting.org. I'll link this in the description below as well, but you can go here to this website to get the same spreadsheet. And I guess like a few tabs that I want to show you is the champions. This is basically the same as like the Dividend Aristocrats that a lot of ETFs are also based on. So these are like the companies that pay and increase their dividends 25 years or more. And then the contenders, I believe it's between 10 and 24. So these are like the next best batch of dividend paying stocks. And then the challengers are kind of like their version of like up and coming dividend stocks between 5 and 9 years. But the spreadsheet the actual tab that I use the most is the one called All CCC. So this puts all the universe of dividend paying stocks that you might want to consider. So there's a few really good columns that I want to highlight. Obviously, the number of years over here in column E is like a very helpful indicator. So maybe you want to be strict and you want to sort by the number of years that is paid out. But I think for me, what would make the most amount of sense is probably either the dividend yield over here in column J, or um, the I guess like the over here this quarterly schedule. So if you want to be like um, really organized as to how you want your payouts to be scheduled, this actually is a very helpful tool to kind of like manage out your cash flows. So maybe in another video, I'll make a video on like if you really wanted to create like a scheduled payout. So let's say you want to be paid like at least once a week. You could probably do that because this gives you like the month, like the quarterly cycle that it pays out in, and like the actual date. So like for example, this guy, let's go to Aaron's. Um, so they pay out on like the A schedule. So like that means like the January, April, uh, July, and then the October cycle, and then B would be like February, May, August, and November, etc. And then C would be, the rest of the months, and it would pay out like around roughly like the third of each month. So if you wanted to be like specific, you can like kind of like mix and match like the different type of dividend paying companies that you have in your schedule. Like ideally, you could kind of like when your portfolio gets big enough, you can actually replicate like a kind of like a job, like have like kind of like a either like a weekly or maybe like a bi-weekly like payment schedule. But like first things first, you want to kind of like figure out which stocks you want. And there's a lot of helpful I guess like criteria they can filter by. So like if you want only like certain sectors. So like for myself, um, or maybe like even industry, like you need to be even more specific. I'm not a big fan of most banks because I've worked in the banking industry before, and let's just say I'm not like too crazy about like the things that go on behind the scenes. So I would actually filter that out myself. And besides, like I'm more of a do it myself kind of guy. So like eventually, I want to create my own wealth instead of like placing my wealth in like these like financial companies. I think most insurance companies are okay. I probably like for myself, I would filter out like the banks. So like what you could do is like if you don't like a certain industry, you can filter them out like so. Um, and then there's a whole bunch of stuff you can do. Like it would take me forever, so I'll probably do like other videos in the future if you guys want that. Um, so that's one way to do things. Like obviously there's a price as of the certain month. What you could do is you could probably um, either you could probably sort this from smallest to largest. I think that for most beginner investors, like maybe you want to just pick out like the cheapest stocks at the moment, and then you do your own like little strategy of you know once it hits like a certain like maybe like a price target, you can like sell it and then like refresh it by buying like the lowest stock for like the new month. So basically, like dripinvesting.org, they do a pretty good job of updating their stocks like on a regular basis. So the spreadsheet comes out on a monthly basis, and the amount of work that's done is pretty amazing, especially when you consider it's a free resource. So I definitely want to like publicly acknowledge and thank you know the folks at dripinvesting.org. I mean, it's just an incredible free resource. It's just I can't say enough good things about it. And then like for like kind of like you financial nerds, if you want to really dig deep into like all the like the facts and figures, like there's so much stuff in here that you can look at, and you can see like what changed, and there's like revisions and like I think the one of them there's like a place where you can see like what fell off. Yeah, like for example like deletions. Yeah, so TD Ameritrade was recently acquired by Charles Schwab, so that this won't be on here anymore. And they do a really good job. I mean, considering like all the things you have to keep up with. Um, and then, so this is like one really good resource. So like one of the things that I like to do is I like to look at what's the cheapest stock or the most expensive stock, and then like so for some of you you probably wonder why I would want to look for like the most expensive stock. Well, for those of you with like slightly deeper pockets or with people that have access to more or more money, like for example, I have a portfolio margin account, so I do have access to a little bit more capital, but I am sort of I try to be very judicious as to how much I like to use. Um, I really don't want to get myself into trouble. I've burned myself before by using leverage products inappropriately, and like once you get smacked around a little bit, then you that's how like people learn the best. Then in the future you're extremely careful not to repeat like those type of painful mistakes again. But anyway, like for more expensive stocks, uh, the reason why I take a look at those as well. I want to like usually for more expensive stocks, your insurance contracts or your options, the premiums that you can collect will tend to be a little bit larger, so you don't have to sell as many contracts, and that's the one of the reasons why I also look at the pricier stocks as well. Um, Now, there's no, I guess, like an exact science to this. I try to be um, mechanical, but sometimes like you still have to kind of override some of your mechanics. For example, I think in a previous video I mentioned don't just like blindly look at like the highest dividend because like for example like this one this really sticks out because it's 12.3 percent dividend yield, and then like you're like, wow, I should really jump in on this. I mean, it's also like a $9 stock, but then you also have to look at like the just realistically. I mean, it's in the equity real estate, and right now might be a little bit dicey. I guess if you're brave, you could go in, but I would probably look at that financials a little bit. Usually, when something is that cheap and like it seems like very too good to be true, you wanna like just take a look for the look to make sure like like maybe some of their tenants aren't able to pay, or just take a look at like the customer or like the clients that are renting it out just to make sure like there's something like fishy going on, or if there's a good reason maybe it's worth the risk. You still have to check it out, do some due diligence. And then like once like I go through like kind of like the list for the month, I'll add it to like my let's just flip back to my Tastyworks platform for a second. And then I can just add it to like my own personal watch list. So yeah, sorry for like that kind of like that messy portfolio that you just saw. But don't like again like don't blindly just copy like my trades, because like some of these are probably by the time you watch this, like most of those trades will have already like fallen off. Um, so just like use some common sense. Like don't just like copy like even if you do like the way I think. Like I'm still human. I can make mistakes, and sometimes I'm not. Um, sometimes I fall in a trap of like following like some of the popular stuff that's out there. Like I do from time to time look at some of the Reddit subforums related to investing and trading, and sometimes like you kind of get lost in like the like all the craziness. Like you see like all these like funny meme stocks, and sometimes I like to also jump in just to see what it's like. I mean, I don't blindly just jump in the trade. I like to do my own homework as well. But sometimes you see some crazy stocks, and you just you might as well like take a shot, and then if it doesn't work out, just replace it. Just get rid of it quickly. Like so, for example, I was I have no idea what this is. This candy technology. I'm guessing it's probably like a high flying like um electric vehicle stock or something related to it. People in Tasty Trade were already trading this. I mean, it has like pretty crazy, 54 million volume, and it looks like I mean, it's not bad. Like, I guess like the bid ask spread, even though it's like after hours, like 45, 55. But anyway, another like good resource for to keep tab on like Dividend Aristocrat stocks. I've mentioned this before in other videos. So like they have their own presets. So you can find like the Dividend Aristocrats along with like 52-week high, 52-week low. And sometimes, like if you just happen to see like in some of these other presets, there might be like some kind of like cross reference, like for example, I don't know what this is, this AMCR, but let's just say it's also appearing in like a 52-week high or 52-week low or any of these other watch lists. That might be a clue that there might be some good action going on, and you might want to also consider it as a trade or as an investment. I think for most people, they have kind of like a mix of both nowadays. Like for myself, I think the Wheel of Fortune strategy, again, I keep sounding like a broken record or like a kind of like an old man, like just like repeating myself. But I think there's a reason for that. Dividend Aristocrats, you know, given enough time, you can set yourself up for like a nice little retirement, and then like if you add like the Wheel of Fortune strategy, when you also sell option premium against dividend aristocrats, like you add in like the dividend income plus the premium option premium. This could be good for people that like to practice like the FIRE method, like the financially independent retire early crowd. I know it's like a lot tougher nowadays. The economy being what it is, but there's still hope. I'm really proud of the millennials out there that they're willing to hustle. You have multiple side hustles. You have multiple things going on. I mean, that's how I got inspired for just creating my own YouTube channel. Like maybe one day I'll also have maybe like a decent amount of following. Maybe I'll have like some ad review in the future if you find like that these type of videos like provide some value in your life. Please consider liking and subscribing. You hear this from like other YouTubers, and I also like try to support like other similar YouTubers, like either via like a like or a comment. It really makes people's day when just like some type of like human interaction to let people know that like people are actually watching, and more importantly like you're actually benefiting in some way, like monetarily. Uh, but anyway, let me get off my soapbox. Let me get back to this. So there are a few things that you can do to like for my own personal like ranking criteria. Like the first and easiest one is like you can go to like the last trade price. Like I mentioned before, like you want to check out like the kind of like pricey stocks. Like for example, I really like Roper Technologies and Syntis. So they make like uniforms. So like this could be a play for like an improving economy. Um, so like I just happened to rank it by like the stock price, but like this is one way to kind of like see for yourself, like kind of like like stuff like this like makes you go like if Syntis, like if their stock price is improving, that means that they could possibly mean that the economy is getting better. I mean, just look at just from like the March lows to like what it is now, like 152. I mean, sheesh, that's more than a double since off of the lows, which is like really good. Like that gives me like some more confidence, like some hope that the economy is improving. If like people are buying workplace uniforms, that means like there's more workers being hired back. Like maybe not as fast as we want, but there's like some good hope. And then I've traded this before, and the only bad thing about this like particular stock, even though the premiums are you can get like a pretty decent premium out of this. Like so, for example, hopefully if I trade this like maybe next week sometime. Uh, if I get filled at the mid price, that's a pretty decent premium. So if you follow the tasty trade mechanics, like half of this will be like almost a buck 50, so $100 50 off of 33,000 uh, um, amount of capital being tied up. So you could get like a pretty decent return. It's not as good as like what it was like back in like around like February to April, but it's still pretty decent. The IV rank is like a little kind of lowish, but sometimes you just have to take what the market gives you. For example, if you compare that to like Sherwin, like the paint company, like the premiums are also pretty decent, and the bid ask spread is not as bad as I thought it would be. But like for example, this one, like you know, this ties up a way more capital, and this is you're only getting like $30 more than like say like Roper because it has a higher IV rank. Like this, like from a risk reward standpoint, isn't as good. I like I mean, there's pros and cons, right? Like the bid ask spread is like a lot tighter. So, so it really depends on what you're going for. And then even for like a IV rank, it might be better to do like a debit, like a long call vertical. Um, so like, I'm just throwing ideas around. These aren't like any trade recommendations, but just like some ideas like what you can actually do in your own account. And I would personally skip the Williams. I like to gravitate more towards like even though these are like pricier stocks, there's like the higher IV rank um, gives me a chance to collect more premium. Again, like Roper, the only bad thing about these guys is just like these. I really hate these wide bid ask spreads. Like you're probably getting ripped off every time you trade it. But you know, again, every strategy has like their and every stock has like their own pros and cons. And then let's look at the other side. If I sort again by like the lowest price stocks, so I have no idea what this is. Amcor PLC. Um, but this is not bad. If I mean, if you're only doing it for like a short term. Ooh, this will. Yeah, I would actually skip this because just looking, there's like no premium available. So maybe something like and this is just like like it's not the most exciting thing, but this gives you like a insight into like a option traders like kind of like thought process. I think that's so important as well. To you don't want to just like copy people's trades. You want to know what the person's thinking. Now Exxon, from a fundamental standpoint, there might be some hair on this one. Even though like ExxonMobil is it's sort of like a name brand stock. Like it's not a small company, but the amount of debt that they're taking on is like there's a reason I think why I got kicked out of the Dow Jones. I mean they're really hurting, but I mean there's an argument could be made that like it may have already bottomed. I mean it hasn't really broken through like this like I guess like this 33-ish amount. So like this is worth taking a shot in my opinion for maybe like a quick. Ooh, maybe I spoke too soon. Like I'm just looking at the premiums here. Like even though the IV ranks is 23, like there's not much here. Maybe if I go to like the January for 56, I mean, because this is still technically within the TC trade trade parameters. Generally speaking, if like the premiums are kind of skimpy, you can go out a little further to maybe collect a little bit more time value. So at the 32 and a half, it gives a little bit of room between like what the current price is and the like the strike price. So if I collect like 61 or 62 cents, it's not too bad on a return on capital point of view. So that could like if you collect only half, that's like a little less than 10% percentage. So that that could be an idea. Because right now, as we head into the holidays, like I guess like maybe some traders, like the big traders, are like gearing up for like the holiday season, and like there's not as much like action going on. And hopefully there's no like crazy like uh some like market moving event that like causes a crash. But it's good to be prepared. Another thing you could do is you can actually just sort by the IV rank itself. And then like if you at the lower end of the range, like for the IB ranks, what you can do is you can consider like debit spreads, debit call spreads, or debit put spreads, like if you're bearish. Um, so then like if I flip the IB rank the other way, um, yeah, a lot of these like it's still. I mean, there's nothing over like 50%. But let's see what genuine parts could do. I think I've mentioned this also in the previous video. Um, yeah, the bid ask spread is like so wide. I don't like that. Um, I mean, 35 cents at the 35 strike. Uh, eh. And then Hormel. This could be something. They have earnings too, so like let's just see what they have. Yeah, it's a little wide, but it's worth like if you. I think Hormel they actually make the spam product, so I guess like with Thanksgiving coming up, and if you're having a tough time, you'll probably buy some spam, and then you can collect some premium to actually buy the product itself. No offense to anyone that actually likes like eating spam. Um, I actually ate it when I was a kid, and like I grew up in a relatively poor um, immigrant household. I'm very fortunate to be born in like the United States, born and raised. So I really appreciate like the capital markets here. It's just like there's nothing else like it in the world. I mean, that's why a lot of like international traders all across the world trade like our U.S. markets. Um, but again, like, sorry, let me get off my soapbox here. And yeah, I mean, these are like some of the. There's nothing crazy here. These are just like basic things that I kind of look at. If I see something that's like interesting, I'll probably do a little bit more research. Like for example, recently Amazon is coming out with their own like pharmacy, so that's why like Walgreens is taking a big hit, and so I might actually take a look at this one too, because like stuff like whenever you see like some headlines, like that could be also a clue, or maybe like some trade ideas that you can also act on and like see, like from there, like you could probably get some trade ideas from there. Even like when I'm just like making this video, like there are ideas that kind of just like pop into my head, and this could be worth 55 cents is not bad, especially now. So I don't think Walgreens will take too much of a like more of a hit. I mean, they could, but I'm just looking at the price action here, and also I'm not like a super technical trader, but I like to look at the the charts, just to get a perspective of like where we are. I mean, we're definitely in like the lower end of the range. Um, and I like to look at Bollinger Bands, just because it's for me it makes like more sense than like some of the other technical indicators, because you have like a moving average, and you can kind of see if it's above or below like price value, and then the Bollinger Bands helps kind of see where the kind of how volatile things are, and then to kind of supplement it, you could use like something called average true range in terms of like like price action to see how volatile things are, in addition to like stuff like the VIX. So I don't, I my technical analysis isn't like too crazy. Once in a blue moon, I might look at like what do you call it? Those Fibonacci um like retracements, just to see like where other people might be thinking of placing their trades. But I'm not like too crazy in that. I think like there's enough information from just looking at dividend yields, just price itself, IV ranks, and then also just like using some common sense of looking at like bid-ask spreads. I think that's you know like good enough for most traders. And then like you can supplement it with like some fundamental analysis. A lot of folks like the Yahoo Finance, and then like from time to time for like stocks that I want to hold for like a longer term investment. You could do look at like search for like the company's 10Q and 10K. That's more for like a little bit more hardcore, traditional, fundamental financial analysts such myself. That's how I was trained, and it takes more time. But if you're holding it for like a longer period of time, I think it makes sense because you want to have like a good sense of what the company, if they're able to pay the bills, able to pay their the shareholders. So, but anyway, I think I'll wrap it up. This is probably getting a little too long again. I apologize for like the length, but I think it's helpful for people to kind of like understand like people's like thought processes, and then in the future, like you if people like this, like I'll definitely make more of these types of like I try not to be too long-winded, but I guess it's just like the way I am. I like to um dig a little. I'm willing to dig a little deeper, do more homework, because I think that makes for like a good analyst and for a good trader. Yeah. So thank you guys for watching, and I'll see you guys in the next one. See you later.